Hello, everybody. Welcome to this webinar brought to you by our company Wealthford in collaboration with RHB. Our webinar title today is Trading Warrants using the Volatility Contraction Pattern, which is VCP. So, welcome everybody. My name is Shane Chu. I'm the moderator for this session. So, in this webinar, we are going to explore this very little known strategies called Volatility Contraction Pattern. It is used by a 2 times US investing champion with real money, Mark Minervini, to use it to win the US championship, investing championship twice. All right. So today we're going to study what exactly is these strategies and how do we use this strategy to trade stocks as well as to trade warrants. We're going to go through a couple of case studies so for you to deepen the understanding in this strategy. All right. So before we begin, disclaimer. Whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, today we have 2 speakers. The first speaker will be Mr. Nigel Chong, followed by the second speaker, which is our esteemed guest from RHB Investment Bank, who will talk about how to use warrants to gain leverage to trade this VCP pattern. Okay, so the first speaker will be Mr. Nigel Chong. He is the founder and principal trader of NC Space Investing. He is also a marketing representative registered person from Securities Industry Development Corporation, SIDC. He actively trades in the Bursa and US stock market, and he has a bachelor's degree in business economics and finance from the University of Nottingham, United Kingdom. So his trading style is heavily influenced by Mark Minervini's VCP trading method and William O'Neill's canceling principles. So Nigel, it's good to see you here today. How are you?
I'm good, Shane. Thank you. Nice to see you too.
So we can't wait to learn from you about this VCP trading strategy. So I will just stop sharing my screen and hand over the control to you.
All right. Okay, just want to check with everyone if everyone can hear me well and can you guys see my screen well? If yes, can you type 1 in the chat box? All right, nice. So first and foremost, I would like to thank LiveSham and RHB for having me today to share about this topic, VCP. Thank you, Shane and Vanessa, and thank you all participants for joining us today in this wonderful Thursday night. All right. So just a short introduction of myself. I'm Nigel Chong, founder of NC Space Investing and a trader of NC Space Investing. I'm also a MR registered person from SIDC. So now I'm focusing on both markets, US and also Malaysia market. I hold a bachelor degree in business economics and finance from University of Nottingham. So I'm trading based on Mark Minervini's VCP method, which I will be sharing more later. Okay, it's a very, very interesting topic and very exciting to share. And also, I'm also very lucky to be influenced by William O'Neill's canceling model as well. So here are some of the past presentations and past sharing I've done, including some hosted by Investing Node, Mumu, and also by Bursa. I'm also one of the speakers of Bursa webinar. Okay, so just briefly go through on the topics of today. Firstly, we're going to have a brief and complete understanding on VCP and how can we use VCP in trading stocks. All right, and the principle and understanding of VCP strategy, and how can we apply the VCP trading methods combined with structured warrant, and what are the differences? Okay, later on we will share some of the examples and you will see if you apply it correctly, you can multiply your gains. All right, and also we'll go through if structured warrant is a good tool for you or not. Okay, Also, we'll be sharing some of the tools that how to choose an ideal warrant, okay? And what are some criteria for you to choose a good warrant, okay? And how do we manage our risk, most importantly. So before I start, I just want to ask all the participants if you have heard of VCP. Anyone you heard of this technique, VCP? If yes, you type 1. If no, you type 0 in the chat box. Just let me see how many of you actually heard of this strategy so I can explain it, okay, based on your level of understanding. Okay, I see a good mix of 1 and 0. Okay. Okay. Nice. Okay, thank you. Thank you for your participation. So before I talk deeply into VCP, I just want to introduce you a man, and his name is called Mark Minervini. So he is actually I would call him the father of VCP. Okay, because without him, there's no VCP and there's no so many good successful trader that influenced by him. Okay, so Mark Minervini is one of the most successful stock traders in the United States. And what has he achieved is he achieved a annualized return of 220% over a 5.5-year period. So you can see every year he's earning 220% return, annualized return, and only with one losing quarter. So if we put it in another words, 100K account, it will be grow up to 3 million account in just 5.5 years. Okay, this is during the 90s lah. All right, but he is also 2 times US investing champions. Okay, and these are some of the books that he authored. So you can actually look at some of the philosophy and the trading wisdom that he shares. Okay, and the first book is all about the basics and some of the core principles, and the second book will be more in depth on his trading methods. Okay, and the third book is more on the mindset and how can you trade better in the stock market. Okay, it's not so much about stock market, but it's more towards the performance side of trading. All right, so I just want to share with you a story, a real story of Mark Minervini. Okay, and he was the champion of USIC, which is US Investing Championship. So he was the champion for 1997, and actually he has already participated in the competition 1 year before 97, which is 96 lah. All right, and that time he got into the championship and he was achieving around 90% realized profit, realized gain. Okay, but at one point of the competition, the organizer called him, "Hey Mark, sorry to tell you, but we have to stop the competition." And Mark says, "Oh, that's too bad. I'm already achieving a good result, but due to some regulation problem, they couldn't have the competitions continue." So what happened was Mark actually asked for his standing in that competition. Then the organizer replied, "Mark, you are the first in the competition, but unfortunately we cannot continue to host the competition due to the regulations." So Mark said, "Oh, it's fine." Then the other year, and where the organizer got everything sorted out and resumed back the competition, is totally new year. And this year, it's even harder to get a championship because it's a mixed category. So that means futures and the other high risk derivatives also competing in this arena. Okay, but at the end, Mark actually got champion by achieving 155% return in a single year. Okay, so that's a very impressive result back then, because a 3 digits result, even it's very impressive if we manage to get this result in this time of period, right? Okay, who won this kind of result? Can you show me in the chat box who won? If you want, can you type one in the chat box? If you don't want, if you want negative return, or you want lesser than this, you just type 0 then. I will see how many of you actually want to achieve this kind of result. Wow, I see a lot of one, 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 one. Okay, nice, nice. Okay, so I just want to share you a different story. Okay, it's also by the same man. Okay, Mark Minervini. 24 years later, he decided to participated in the competition again. Okay, this time when he decided to join, he shared with his family and friends, hey, I'm going to join in this year's competition. But everyone is so protective of Mark getting hurt. So everyone tell him, don't join. What if you don't win? Malu, Then Mark say, it's okay. I'm very confident in my methods, and I'm very confident that I can win the competition. So he joined the competition, and at the end, he achieved 338%. So a lot of people doubted him, say his result is not true and this and that, because we know that 2021 is not a very bullish year. Okay, we just came, it's a year after COVID, so we see everything started to decline, and the funds starting to rotate in different sectors. But that time, we can see he achieved most of his return in the first half of the year. Okay, even during the bad markets, he managed to still make positive gain. Okay, even though you see some of the months are single digit, but at the end he compounded that into 338%, which is very, very impressive. Imagine that you have $1,000 of account, $1,000 account, you turn into what? 4,000 something, because 3 times, yeah, including your initial capital is around 4,000 and something. So that's very impressive. Who won this result? You type 3. This time you type 3. Let me see who wants this kind of result. If you pay attention to today's seminar, you'll be potentially achieving this kind of result. Okay. All right. So let me talk about VCP. What is VCP? The full term of VCP is called Volatility Contraction Pattern. So it's a chart pattern that used in stock trading. Okay, mainly is to identify the potential buy points. All right, so you see there are different variations of VCP. Okay, stated here: 1T, 2T, 3T, 4T, and 5T. So as you can see, 2T onwards, every T represent the retracements. So if I were allowed to draw on diagram, right, you will see every time it retraces, it forms a T. So that means, right, you see 5T is 5 times of retracement. All right. And the 2T, normally we call it cup and handle. Okay. So if you go deeply into the US traders history, right, you will see this pattern is actually called saucer pattern. But later on, William O'Neill popularized it and make it cup and handle. So I would have thought that this pattern, if it doesn't succeed from the breakout and continue form, it goes on and become VCP. So it is also one type of variation in VCP, but I personally would call it cup and handle. All right. So what is the understanding behind of VCP is that after a period of consolidation, the market uncertainty starting to decrease. So the buyer and seller also starting to balance. So when you see there's a similarity in these 5Ts, okay, which is the volatility starting to contract and starting to decrease getting smaller and smaller. All right. So that means that the buyers and sellers are starting to balance. Okay. So when the buyers take over, it will form a breakout or an explosive move. Okay. So if in layman term, the market is all about demand and supply. So this method, this chart pattern tells you that at one point, the supply and demand is around the same and it's getting lesser and lesser. So whichever party that participate, it will take control of the movement. All right. So Mark Minervini himself, he described this VCP pattern as like squeezing a towel. Okay. The more you squeeze, the more water come out. All right. So the towel over time you get lighter. Okay. And the water gets squeezed out is it represent the supply. It's like the sellers. Okay. So over time, the towel gets dry up. And when you toss in the air, it's easier than a wet towel, right? So if we put that in chart, put that understanding in chart, it is the same understanding. Okay, so just want to share with you how to read a VCP pattern is that you see here, there's this alien wording 40W31/34T, right? So this actually represent three things. The first is the duration of the pattern. So 40W means 40 weeks. All right. And the second part is 31/3. That means the first T, it came down 31%. And the last T came down 3%. So from this, you already know that, oh, the first one, it went down 31% and the last one is 3%. Okay. Also, the last part of this equation is 4T. So I know that it has retraced 4 times. All right. So by looking at this, I already know that this is a VCP pattern and the pattern lasted for 40 weeks. The first contraction is 31% and the last contraction is 3% and it retraced 4 times. All right. So quite easy to understand, quite easy to read, right? So we will hop on to some example later. Okay. So what is the understanding and the logic behind the pattern is when you see a downswing, right, in the chart. So from here, you see the downswing, it represents the supply, right? So along the downswing, a lot of people participated in the market. They want to participate at low price, right? Most of the time, we do that. Okay. Especially when we just starting on to get familiarized with the market. So a lot of time when the stock price came down, we just want to buy cheap, we want to buy low. A lot of people that get in during the down. Okay. So when the price go back up, at a certain point, it will meet supply. Okay. I just want to ask how many of you, if you buy a share, okay, let's say you buy it here. Okay. Can you see the red line? You buy it here. And when the price go down, and eventually it got back up to your buying price, what would you do? 1, you sell. 2, you do nothing. Can you share with me what would you do normally? Okay, we're just understanding from a normal person's thinking. Okay, a lot of people say sell. Okay, in a normal human behavior, they would sell because they already suffer what? Let's say a 50% drop from here. Okay, and now the price got back break-even point. So now they no longer suffer from the big losses. Now they just, oh, I tak ada rugi. Sekarang saya tak ada rugi. It's good for me already. So they don't hope for gain now. They hope for no loss. So from there, you can see that's where it creates the resistance because they are sellers. Okay, so you see it will come down. Then at one point of time where the supply got digested, okay, and the breakout happens, that means the supplies got digested, like the power got squeezed, got twisted out, and the buyer take control, it forms the VCP pattern. So this is the logic behind. It's basically the demand and supply. Okay. So I just want to show you two of the examples, two of the very familiar name. The first one is Tesla. So you can see the Tesla form a VCP. This VCP pattern lasted for 56 days. And the first contraction, it went down 34%. And the last contraction, it went down 11%. And it retraced 4 times. So this is the equation that we're looking at. Okay. Oops. Sorry. Okay. So you can look at the pattern and you get what I mean. So after that, what happened? After the breakout, it went up 90% in just 51 days. Next example, I want to show you NVIDIA. During in the beginning of the year, right? We see that NVIDIA has a VCP breakout, but very little people know that this breakout has a VCP pattern. Okay, so that time you see the first contraction, it went down 18%, and the last contraction is 6%. And after a breakout, it went up 94% in 64 days. So it's a rather an explosive move in this case. Okay, so I just want to show you some of the examples that Mark himself, he traded during the competition in 2021. Okay, so the first one is STAA, and this one, it has a very quick move. It also went up 31% in just 19 days after breaking out of this VCP pattern that has what? Has a base of 48 days. Okay, 4 contraction. Okay, the second one is ZIM. And before I want to show you this chart, I want just quickly hop on to the next one, which is a daily chart. Okay, because this one, you see, this one is a hourly chart. So we can from here we can know that sometimes it happened in a smaller time frame as well. Okay, and after this VCP breakout, we see a 76% move in just 78 days. Okay, and this 14 days base, because we are looking at a smaller time frame, it has 5 contractions, and the first contraction went down 20% and the last is just 4%. All right, and the next, it's this stock is no longer listed because it got acquired at some point. And back then in 2021, it has a 31% move in 71 days. Okay, also breaking out from a VCP base, 82 days of the base, and this only have 3T. Okay, so OLN, it has a 100 days of the base, and after it break out, it go up 22%. Okay, comparing to the example that we look at just now, it's not as explosive. Okay, Tesla in 2021, you see a rather huge base, 184 days, and the first contraction, it went down 40%. Okay, then it formed a 5T from there, and after the breakout, it has an explosive move also. You see every day it just go up, bullish candle, and very extended. At some point, it just stopped and come back down again. Okay, so I just want to show you some of the examples in the Malaysian market. So some of the names that is in KLCI. Okay, so the first one would be my news. So I only discovered this VCP pattern back in 2020. And I think prior to that, nobody talks about VCP. Okay, so I just went on to look at some of the history of the older charts, and I found this. There is a company name called Bison. and now it has renamed to My News. Okay, so back then we see a VCP pattern, okay, of what? Of a 132 days base, and it has a contraction of 20% of the first contraction and the last contraction of 6%. And it has a 4 contractions pattern. All right. And after it breaks out, it went up 85% in almost 1 year. Okay. And the up is not so smooth compared to the others. But we also see that this is a natural phenomenon in the market. Okay. It's a natural reaction of the buyer and sellers lah. Okay, I just want to say that because a lot of people, they will say, oh, you know, that stock price is actually manipulated, and people want to, they can actually draw the chart as whatever they want. Okay, so I just want to prove that prior to people knowing VCP, we are already seeing this in the chart, in the price. Okay, so the second example is DBIH. Back in 2020, it has a VCP pattern of a very short base, 53 days. And the first contraction is 29%, and the last contraction is 8%. And after it breaks out, it went up 100% in 60 days. Okay, so by looking at this, you already have an idea how explosive is the move. Okay, so by looking at this, if you divide it by days, right, every day it went up like 2%. Okay, by average. So by looking at this, you know that some VCP that can go up a lot and some is rather short life. Okay, so another example would be SDS in 2020. Okay, this is rather a bigger base. Okay, and it went up it went up 50% in just 27 days. Okay, so I will leave the work to you. I will leave it for you to measure what is the T and how many days have this base form. Okay, and what is the first T, what is the percentage of the first T and the last T. Okay, do some work, do some exercise to get familiar with the pattern. Okay, so I just want to show you one of my big winner in this year, JCY. As you can see, it has a VCP pattern as well before it breaks out. And after it breaks out, it holds very tightly and it went up to a very extensive move. Okay, so it has a base of what? It has a VCP base of 106 days, and the first T is 32%, and the last one is 9%. After it break out, it just went up 200% in 57 days. So in terms of the measurement and how can you evaluate whether it's very explosive or not, you can just divide by the days. Okay, how many days and how many percent it has achieved in that short time of period. So in this case, we can say it's very explosive because in just 57 days, we see 236%. Okay, so I want to show you another abang adik of JCY, okay, which is Notion, also one of my winner this year. So you can see that in a short base, okay, this is rather short base because previously it has a gap up from consolidation. Okay, so after the pattern forms, we can see this has a 3T pattern and the base is just 69 days and we went up 287% in just 40 days, even more explosive. Okay, so if you compare these two, you can see that this has shorter base, but it went up from a base after a gap up. Okay, then it has even more explosive move than JCY. Okay, so now I'm going to show you guys some examples that we can trade with warrants. Okay, so imagine that you catch one of the winners and you can multiply your gain using structure warrant. And just now we see a lot of example. We have what 50%, 60%, 70%, and even 200%. But if you manage to catch a 200% gain, and if you put it in a warrant, maybe it translates to what 500, 600%. So it's a very it's a big difference. Okay, but of course there's also a risk with it. So later on, we will be going through some example, and Vanessa will be sharing with you what are some of the risks of structure warrant. Okay, so the first example I'm going to show you is this rather big cap. Okay, we can see this is a billion market cap company, and also we see similarly before the uptrend, right? We are seeing a VCP pattern. Firstly, it retraced 12%. Okay, and the last contraction, it contracts 4%. And after the breakout, we see that 84 days, it has achieved a 70% move. Okay, so for a big cap, for a billion-dollar market cap company, you see this kind of movement, it is very rare to see, I would say. And prior to the breakout, we see that's a VCP pattern. All right, so just want to hope on the abang adik of Sunway, which is Suncon. So you see Suncon, we are seeing a 3T, okay, quite similar to a cup and handle, okay, because 2T we will call it cup and handle, right? So after the 3T pattern form, and the base is 112 days, the first contraction is around 18%, and the last contraction is 5%, and it has, sorry, this one is just 3T, it's my typo. And after a breakout, it went up 185% in 329 days. Okay, so this is not as smooth as, and it's not as explosive like Notion and JCY, but we can see that it's going up. Okay, and it also managed to achieve a big gain. Okay, the next one I would like to share about YTL Power. So YTL Power, some of you may argue that it's not a VCP, but actually if you zoom it out, you look at the weekly chart, you will see the characteristic is there. Okay, so firstly, it has a what? 20% retracement from the top, and the last retracement of 5%. So this is the characteristic we want to see. Firstly, it came down a lot, then slowly it contracts. After that, it provides a low risk, as in an entry that provides a good risk and reward. And after the breakout, it goes up all the way. And this period of time, I would say that time, if you look back to the market, that time was a very bearish market. Okay, a lot of stocks that are going down, but this stock, YTL Power, is breaking out. Okay, and it has a very explosive move, 469% in just what 337 days. Okay, if you look at the days, it's not so attractive, but you look at the gain. Okay, now you can measure it with the days. So I'm not sure whether you find a similarity. Normally, the first retracement is within 35%. Okay, all of the example we have shown, 35% in the first retracement, and the last retracement, normally we want to see it's within 10%. So this come back to our part that we want to see a good risk and reward. Okay, so if you are risking for 5% and you manage to achieve 400%, this is a very good risk and reward. That means you are risking $5 for a $469. Okay, in that sense. So the other example is Massing. So you see Massing is 1T, 2T, 3, and 4. And the 4T is rather, it's shorter. Okay, the third and fourth is shorter. Okay, and the last T is just 5%. The first T, the first contraction is, it contracts and it retraced 18%. Okay, after the breakout, it went up 125% in just 189 days. Okay, so you are looking at the gain 125%, but this is without using structured warrant. Okay, so this is the effect on the mother share, the share appreciation of the mother share. So imagine that you have the knowledge to spot a VCP and you manage to apply that using structured warrant. You're buying that with some of your capital to that structured warrant. You can see the gain is even bigger. Okay, but again, that's also risk lah. So later on, Vanessa will be sharing more on how do we manage the risk and how is the difference of the mother share and the structured warrant. Okay, so the last one I want to show is WCT. This is also quite recent, this pattern. So you see that this base has lasted around 153 days. Okay, the first contraction is 24%. Okay, after that it goes ding dong sideways. Then the last contraction you see is rather tight, hanging around 20-50 days EMA. Then it has an explosive breakout. Okay, so if you look at the chart, it is also it's not coincident. It's the breakout happened after the earnings. So after earnings, it has a very explosive move. As you can read from the reading, in 60 days, it went up 143%. Okay? Clear? Okay, so thank you all for your participation. And this is my presentation on the VCP part. And I hope you guys have a great takeaway. Later on, we will have another guest speaking, which is Vanessa, warrant specialist from RHB Investment Bank. So before that, I just want to share my Facebook page. You guys can follow me, drop me a follow on my Facebook page. My name is Nigel Chong, and you can find me on Facebook/ncspace.investing. Okay, and here are some of my contact. Okay,
all right,
so
thank you
I
so
will,
much, Nigel.
yeah, I will give it back to you, Shane.
All right, thank you so much, Nigel, for sharing with us briefly what exactly is volatility contraction pattern and how to use it to spot the breakout to capture the explosive gain after that. All right, so if you have any question for Nigel, you can write in the Q&A box. We will come back to the Q&A sessions right after the sharing from Vanessa. All right, so Nigel will still be here to address your burning questions about VCP. So coming up next, we have the warrant specialist from RHB Investment Bank who will share with us, how do you use warrants to gain leverage in the stock market, and how do you use this product effectively, because warrants is very complex. So in this session, you're going to learn the essentials in warrant trading and how you can use it to complement the VCP pattern that you just learned. All right. So I will just hand over the session to Vanessa. How are you today, Vanessa?
Hi, Shane. Hi, everyone. I'm good. Thank you so
All
much
right.
for dialing in,
Cool.
everyone. I think I see
Right.
a lot of familiar names in the chat, in the attendees list. Thank you so much for dialing in. And I hope everyone had a really good session. All right, so Shane, I continue, right?
Please go ahead.
All right, Ken. So thank you so much for organizing and arranging for this session. So today it's really a pleasure of ours that we can actually collaborate with Nigel on, to leverage on his knowledge about this technical analysis using the VCP, because honestly VCP is not really popular, but I would say it's not widely used, but it's really, really powerful. So for a structured warrant, I guess if you are already in this webinar, you must have a little bit of experience in trading. And I hope that you are already investing in structured warrants as well. So how do we actually use this VCP into warrants trading so we can explore on this together, okay? All right, so this is what that Nigel shared with us. He actually shared with us on how he actually identified the breakout price of WCT earlier on, and also with WCT's gain of about 100% and more 130%. If or if you are also one of the investors into our WCT call warrants, okay, besides from investing in the mother share, if you are investing in the warrants, then the performance of WCT during this time zone, May to July, the gain was actually very good. It's about 669%. All right, imagine the investor actually purchased WCT warrants at 6.5 cents earlier on over here. He actually would get about 100,000 units, like if he's investing with 6,500 ringgit. While at the end of the day, if he decided to dispose this whole thing, I would say these WCT shares, then he will actually get a very good return, which is about 50,000, because 100,000 units, and then now it's like 50 cents. So it's actually more than how much he invested earlier on. So it's about 600% gain. So this is an example on WCT. And second would be this thing. All right. So second, this would be on Sunway C22. Okay. So for Sunway C22, we are looking at this 47% gain on the mother share from 13 March to 30th July. While Sunway C22 actually gained about 239% from 14 cents to 47.5 cents. All right, so maybe you don't have any concept about all these cents, but in the terms of percentage, you can actually picture how powerful it is by investing in structured warrants. All right. As we know, that's always double-edged sword, like investing into a very powerful instruments. So when the price went down, it is also very powerful as well. So YTL Power C58, so we have seen very good performance the past year, and while we actually managed to see some of the downtrend from 30th July to 29th August, which is today, the price of the call warrant actually dropped from 8 cents to, as of today, unfortunately, is about 1.5 cents left. So due to the leverage exposure, due to the effective gearing and all, the YTL Power share went down for about 21%, while YTL Power C58 went down for 80%, 81% to be exact. Yeah, so this is how we actually have to exercise caution while trading in warrants. So today I'll be sharing with you how we identify the stocks and how do we apply it and how do we exit from the trade using the tools that we are going to share with you. All right, so very brief, what are structured warrants? So if you know that structured warrants is actually an instrument that derive the value from the underlying assets. So underlying assets such as single stocks, like I just provided to you, a basket of stocks, ETFs, and also index. All right, so all these structured warrants are listed on Bursa Malaysia. Okay, so you can see this is these are just a snapshot from RHB TradeSmart, because I'm using RHB TradeSmart as my main platform. You would see HSI is actually the Hang Seng Index warrant, which you see after the dash H is actually a put warrant. And what you see after the dash is C is the call warrant. These are index warrants, while these are the single stocks warrant. Okay, so for put warrants, it's not very common to see, but there are still put warrants in the market. It actually the returns actually moves opposite in the direction of the stocks. So if the stock make money, then your warrant will lose money. But in the case of yours, the mother share is going down, then you actually make money from the put warrants. All right, so these are the differences. While the call warrant is actually more, it's actually more regularly traded. Call warrant will actually follow the direction of the stock. Okay, so yeah. So structured warrants is actually different from company warrants. I think I have to mention about this, as structured warrant is actually issued by a third-party issuer like us, RHB Investment Bank. So a bit of story. And then for company warrants, like example over here, Ecover WB. So it's actually issued directly by Ecover, the company themselves. So the main difference of these two warrants, right, structured warrants and company warrants, for structured warrants, because they are issued by a third-party issuer, like the financial institutions, financial institutions like us, RHB Investment Bank, Maybank, Investment Bank, Macquarie, and these are all the issuers. And the issuers are also the market makers for all these structured warrants, which means we will provide the bid and ask quotes and also the volume for you to trade in the market. All right, so we are the market makers. While for the company warrants, like example, Ecover WB, there's no market maker. So the price of the company warrant is actually based on the demand and supply in the market. All right, so bear in mind, so today we'll be talking just about, there's only structured warrants in the discussion. Okay, it will be easier for us to understand. So how do we use VCP? Because VCP is a type of technical analysis for you to identify the price. But before that, you have to identify the stocks. All right. So according to the sharing from Nigel, then I think you have some favorite stocks. I believe that you have favorite stocks in the watch list already that's lying there. Or you are going to search for some new favorite stocks using the VCP that you just learned. So once you have identified any of the patterns, you have to determine what is the breakout price. So I guess I'm pretty sure that it requires a lot of patience to identify the pattern and also determine the price to go in. All right, so after you have done with the selection of the shares, you may now proceed to filter the warrants using the warrants tool and also strategize your trading. Your trades using the price matrix. So this is these two things are really important. How to use the tool that we will share with you, that we are going to share with you, and also how to use the price matrix. Okay. All right. So if you have not known yet, we have RHB Warrant website that is free for everyone. You don't have to log in or anything. It's free. So you can always visit us because our tools are all inside. You can see there's a toolbox over here. Yeah, the toolbox is actually for you to use lah. All right, so warrant.rhbgroup.com, and then this is the warrant search function. So this warrant search is actually very fun to use because when you have nothing to do, you want to look for some good warrants in the market, not only RHB warrants, but some other warrants. You can use this warrant search. And that I'll show you later on when we look for one of the examples. All right. So for structured warrants, there's all these parameters that you need to know before you invest. Because besides from investing in shares, you have to know, like, for example, Sunway C28, 27, 26, all these Sunway warrants, they have the fixed exercise price, the fixed exercise ratio, and also the fixed expiry date. All right. So all these are fixed unless, the price and the ratio, it will be there will be changes if there's any corporate action. Okay, so there will be announcement made. And besides from that, you have to know before we invest in structured warrants, and why we invest in structured warrants is because of the leverage exposure. Am I right? Because we want the gains to be magnified. All right, so that will be the effective gearing, and also you need to know, you need to understand this concept called the sensitivity. Effective gearing means how much the warrant moves if in the case of the movement, in accordance to the movement of the mother share. So effective gearing, usually it comes with times. So it works as the magnifier. When you see 4.5 times, means that the warrant is going to move 4.5% with every 1% in the share price. Imagine WCT move by 1%. WCT C25, if the effective gearing is 4.5 times, then it's going to be 4.5%. So it's very straightforward, but it's not absolute. Okay, so because for effective gearing, it will change from time to time, so it's not absolute. All right, so first thing is effective gearing, how big is the movement? Well, secondly is the sensitivity, because it's quite confusing. I think at the beginning, is how fast the warrant moves. So 1 tick, 2 ticks, 3 ticks, you will see the unit is actually in ticks. So which means that how fast the warrant will move in accordance to the movement in the share, in the mother share. All right, so I think this is textbook. So we will just go for some case study and example later on. So this is an example on Sunway C28. It's not actually a recommendation on the stocks and also the warrants. So this thing showing here is actually the price matrix for Sunway C28. And this is the Sunway share price with all these bid and ask that's lining up over here. So for Sunway C28 is currently trading at effective gearing of 5 times. So 1% in Sunway is about 5 times, about 5% movement in Sunway C28, and also the sensitivity is by 2.9 ticks. So it's about 3 ticks. All right, so you can identify the ticks, which is the sensitivity, from the color of this, and we call it the flipping point. You see 1, 2, 3 ticks in the mother share, and then there's 1 tick movement in the warrant price, Sunway C28. All right, so how do we actually use VCP to gauge the entry price? If you have identified the breakout price at 4 ringgit on Sunway mother share, and you would like to invest into this warrant that is giving you 5 times of effective gearing, then this would be your entry price. We use bid to bid as a reference, 14 cents. And you would like to have a TP of 4.07 ringgit, 407 over here, then you can use the price matrix to identify that the price that you're going to sell your Sunway C28 warrant will be at 15.5 cents. All right, so numerize it. From Sunway shares is about 1.75% gain, while Sunway C28 potentially will gain by 11%. All right, but one thing to remember, for all these price matrix, they are actually, will be refreshed from time to time in accordance to the movement of the mother share. So it will be really useful if you are using a live price matrix. So for RHB warrant, we are providing this matrix live. So every 15 to 30 minutes, then we'll refresh the matrix. So you will see there will be some changes in the effective gearing and also the sensitivity and also the price. Yeah, so you can actually use it on our warrant website to gauge the entry and exit price. Okay, and this is another for massing. So massing, if you're going in at 90 cents and exit at 11 cents with this mother share movement, and then this will be the potential gain. Okay. All right. So why do we say that you have to use price matrix to look for a warrant? This is the price matrix that is available, that is made available for everyone on our website. We have 2 Sunway warrants right now. We have C22 and C28. All right, so these are all the parameters for respective warrants, and these are the price matrix. So you can actually you can actually work out a very simple calculation on how to enter and exit at this price with an example of about 1.75 gain in the mother share. Then Sunway C22 is going to go up for 7%, while Sunway C28 is going up for about 10.7%. All right, so you can see the effective gearing are different and also sensitivity. Actually, for C22 is more sensitive than C28. But if you would like to have a bigger movement, a more amplified return on Sunway, then you can actually go for C28. But in the case that your view that you want to go in and you want to trade in the short term, you want to go in and come out fast, right? Then you can actually go for something that's more sensitive, which is Sunway C22. All right, but in general, on the side note for me to share, I would actually look at something that is with further expiry date, because you have longer time to trade. This is January 24th and this is November 26th, then you know that one is longer, the C28 is longer. And also the exercise price. Exercise price is another thing that I think is really important. For Sunway currently it's trading about 4 ringgit, and exercise price of Sunway C28 is actually closer. While it's further because like currently it's 4 ringgit, but it's further for C22 because C22 exercise price is 2 ringgit and 98 cents. So this one is already in the money, and you can see actually the warrant price is slightly more expensive. In the absolute amount, it's actually higher than this one, which is closer to the expiry price, exercise price. Okay, so that is something that I would like to share. Okay, so this is how you choose warrant using the right tools. First, you look for the underlying, and I would personally go for issuers who's providing live price matrix because it's easier for you to trade. I mean, it trades with better transparency on the price. And secondly, get rid of those that's close to expiry, and then don't trade. I would say don't trade something that is about 1 or 2 months near to expiry, because you have very limited time for it to, if in the case that the mother share went down, you have very limited time to recover from it. And secondly, the time decay is really huge, which means that the time value of these warrants is going to depreciate faster when its closing is approaching to the expiry date. All right, the second thing is the moneyness. Moneyness was the one that I mentioned, that it's closer to the exercise price. I would look for something that is closer to the exercise price. Third, very important, the effective gearing and sensitivity. So you do not want to invest with a warrant that gives you huge effective gearing. It's going to move 10 times, but it's not sensitive at all, which means when the mother share goes up for about 5%, then your warrant is not moving, not even one tick. That is called the sensitivity. And last but not least, use the price matrix to exercise your trade. Okay, all right, so let me share with you our RHB warrant website. It will be more fun because, I'll share with you live. All right, so this is our website, warrant.rhbgroup.com, or you can search it on Google. This is the toolbox that you can use. Warrant search, which is I would say is one of the best tool. So if you have identified one of the shares, like for example Massing, you're still positive, you're still bullish on Massing, but definitely with the application of VCP or other technical analysis, Massing currently RHB has issued we have issued two Massing warrants, existing two Massing warrants. And then in this case, you don't want to expand your selection to not only RHB. You can actually look for other issuers, like for example, issuers with live price matrix, and then you can start comparing. My practice is I would actually add moneyness to look at, how close it is to the exercise price, which I will sort accordingly, and I will look for something that is quite close to the exercise price, like this 3%, 1%, 3% in the money, 1% in the money, and 16% out of the money. If you want to compare, as I mentioned about the intrinsic value, for those which is deep in the money, the price is actually slightly higher because there's intrinsic value in it. While for those that is out the money, like example 50% out the money, you can see the warrant price is actually relatively lower. Okay, I wouldn't say cheaper because it's not the value, but it's just the price. But imagine if you are trading in warrants and one tick in warrant is actually 0.5%. All right, so 0.5% over the price of warrant, you're actually gaining a bigger percentage. So, and that is the reason why I will actually look for something that is quite close, like these 3% in the money, 1% in the money, and 16% out the money. And then I will start looking at the effective gearing and the sensitivity, which you can actually choose. But of course, get rid of those is like expiring soon. All right. So yeah, you can actually use this to identify. Like for example, if you are just looking at effective gearing 4 times is okay, 3.5 times is okay, and 4.5 is actually not bad. And if you're okay with very short trading date, then you can go ahead with it. But if you want to have more because you are uncertain about the future, I would say the movement of the share, then you can go for something that is longer expiry date and also not too responsive, because when it drops, also drop faster. Okay, so this is our website. So you have identified. Actually, for me, I would go for C65. Actually, C65 is closer to the exercise price, which is providing you. Okay, so for data that's showing here, that's showing currently, it's actually aftermarket. So you can use it during the market hours, the trading hours, it will be more accurate. All right, but this is, I'm just showing you how to use it. So there's this price matrix and also the gearing and sensitivity. And if you click over here, there will be the exercise price, ratio, expiry, and all other parameters for you to apply. And these are actually the historical price. You can actually move your cursor and you can actually compare the share price closing and the warrant price closing. Okay, so just a quick sharing on our website. Yes, so okay, where was I? I think I was. Okay, so that's how we actually use RHB One website as a tool. Okay, so if you also an investor on the US market and you would like to have some exposure on the US stock, but with a leverage exposure, you can actually explore on RHB issued US warrants. Okay, US stock warrants. We are the only issuers that's issuing US stocks currently on Bursa Malaysia, Amazon, Microsoft, and Intel. These are the three US warrants that's actually available currently. You can compare that. Okay, why do we actually invest in US warrants? First, we are providing a levered exposure, which you can look at the effective gearing 4.4 times, 5.5 times, and about 5 times is going to give you like 1% movement in Amazon is going to give you an approximate of 4% gain in Amazon warrants, Amazon C3 warrants. And in relatively, you would see for US warrants, they are actually trading in ringgit Malaysia. So it's about 55, 5.5 cents is not even 55. 5.5 cents for 1 unit of Amazon C3 warrants. While if you want some exposure and you are buying directly on the on Nasdaq, and then it's going to cost you about 1,000 ringgit, okay, because you are going to use US dollar. All right, this is how these are actually the benefits of trading warrants on Bursa Malaysia. All right, it's going to require a smaller capital outlay, and also you don't actually have to think about the exchange rate, because we will actually consider that for you. All right, so this is actually Warrant in Focus. That's actually a write-up that is provided by RHB Warrant to our subscribers. Yeah, so Amazon up for 10%. It was in June, while the share price actually had a 3.6% movement. So this is how we provide. This is how the warrant actually provides leverage gains on this certain underlying to our investors. Okay. Yeah. So why invest in structured warrants? I think it's quite clear. You are going to it will works the best if you can actually identify the entry price and also exit price. All right, so this is just a very small example on Public Bank. Recently, I think Public Bank is one of the very popular stocks the past 2 weeks. Okay, so Public Bank Berhad actually gained for 10%, while Public Bank C99 issued by RHB Warrant gained about 300% from 1.5 cents became 6 cents today, while the stock actually gained for about 10%. All right, so first is going to leverage your exposure on the asset, which is Public Bank shares. Secondly, requires a smaller capital outlay. You are going to purchase the warrant at less than 10 cents. And also third, it's the liquidity that's provided by the market makers. All right, so yep. So of course we have learned about how to trade warrants using all these tools, and also how great is the gains that's amplified by the leverage, by the effective gearing. There's also risk management that you have to do while trading for warrants. First, you have to set a stop loss or a cut loss if you have had a wrong view on the stock's direction. For example, my third example on YTL Power, while the mother share dropped for 20%, the warrants actually dropped for 80%. So you have to set a stop loss. All right. Secondly, it's a time decay. The warrant value will depreciate faster closer to expiry date. Third is the usage of price matrix is going to provide a transparency on the prices while trading warrants. Okay, and last but not least is the expiry of structured warrant, because structured warrants are all cash settled. So if you want to have reminders, then you can follow our Telegram channel for all these reminders about the expiring structured warrants. Yes, so if you want to know about all these details, you can actually follow us, and I'll share with you later this one. Okay. All right. So why trade with RHB warrant? Because RHB Investment Bank is one of the, I would say, older issuers in the market. All right. So RHB warrant, we actually provide a live price matrix, which some issuers don't provide it live. We provide it live. All right. Secondly, is that we are providing very good liquidity on our issued warrants, very tight B&R spread, because when you invest, you want to invest with very tight spread because you are not going to lose on the cost. I mean, the spread that is actually your cost. And also the B&R's volume that we are queuing in the market is actually sufficient for you to trade. And also, I would say averagely quite standard refill speed. All right. So, and also, we provide warrant tools, as I shared with you, the warrant search, warrant metric, and we have a lot of other tools that's available on RHB Warrant website. So overall, the website itself is actually a toolbox for you to trade. You're not going to use Google, because Google is going to tell you what is it, but it's not going to tell you all the comparisons of the warrants in the market. But RHB Warrant website, yes, we can do it. And last but not least is very supportive warrant sales team like me. Okay, so you can contact us. You can scan here for our Telegram channel. Follow us. All right. So if you have encountered any technical difficulties, or maybe some questions, inquiries, then you can call us directly on this direct line. Okay, or you can actually, I think you can just call me. I mean, we'll be there to assist. All right, and I think that's all from my sharing session. I think we'll proceed this with Shin next. Thank you, everyone.
All right. Thank you so much, Vanessa, for sharing with us the essentials of warrants trading and how can we use warrants as a tool to gain leverage in the stock market. All right. So if any question to ask any of our speakers, please write your questions in the Q&A box. Okay, we'll first post the questions to Nigel. Okay, I've seen a couple of questions about time frame. So for your VCP method, which time frame can we apply it on? Any time frame that works the best?
So normally for myself, I would prioritize on daily time frame, because I personally is a swing trader lah. So that question is very dependent on what kind of trader you are and how long is your average holding period lah. So for example, if you are a trader, you only trade for intraday, then you shouldn't be focusing on daily chart, right? You should be looking at a lower time frame, maybe hourly chart. So different time frame tells you different story. So for me, I look at weekly for the directions and for daily for the more precise entry. Okay, a better entry and better risk and reward lah. So for me myself, I use daily. But to answer that question, it go back to that person's preference and that person's trading style.
Okay, so it can be used in a different time frame. All right.
Yeah.
The next question is asked by Stefan, who want to know about the pattern of the VCP. So his question is, so for instance, for the YTL power, the VCP pattern is valid because the first T, the low was 0.655.
Okay.
And had any one of the following T's fallen below 0.655, but it still produces another T rounding bottom, will this pattern still be valid?
If I understand this question correctly, that means that the second T, it drops below of the first
The first
T.
T, yeah.
Yeah. So in that sense, right, it only can be valid if the T later, it's it contracts on the second one. So that means it gets smaller lah. Okay. So from there on, we look at the second one and onwards, if it gets smaller and smaller and it has the breakout we want to see, then it in my opinion, it is valid. Okay. But let's say from the chart perspective, the second normally what we see in VCP, we want to avoid this kind of situation. Okay, because it would take longer time for the pattern to form. Okay, so to that, my answer is if the contraction later it contracts to the smaller swing than the second T, then it is valid. Okay, but of course it has different consideration as well. We need to see where is the resistance, where is the breakout point, etc., etc. lah. But in VCP, rarely we see that.
All right. Thanks, Nigel. So the next question I see on my screen is that how do we screen for stocks that show this pattern? Do we use our eyes to really shop it, or you use some screener to help us to identify stocks that have this pattern?
Okay, so to date, I don't have a screener that if you screen, you can just screen all the VCP. Unfortunately, there's no such thing yet. Okay, but I personally, I run a few screens and I run through it by my eyes. And if you are familiar with the pattern, you can spot it easily and you can spot some potential VCP. So for example, you have seen a stock price, it has formed 2 to 3 Ts and potentially it has a breakout point that you can see where is the resistance already. So you can actually pre-plan your entry. In that sense, you can already agak-agak know where is your buy point and where is your stop loss lah before the pattern even fully formed. Okay, so to that question is I have a screens, but that's not just to screen VCP lah. I have a daily screen, I have a regular screen, but from there you can easily spot the VCP because the VCP fulfill some of the criteria of the screens.
All right. So is it like is this VCP like an ascending triangle pattern? How is it? How are these two different?
Okay, so to answer this, right, I would say they are quite similar. Okay, but for an ascending triangle, you must have an uptrend before the patterns form. So if I can draw it. Can I share my screen? Yeah,
please,
I just
go ahead.
quickly hop on to one of the let's say for VCP we see that it's somewhere around here, it's like that. So for ascending triangle, you must have an uptrend before, okay? Then you see the triangle somewhere around here. So firstly, you must fulfill the criteria, which is it has a pre-existing uptrend, okay? But in VCP, normally it could be a consolidation like this. It doesn't necessarily require you have a uptrend. But in terms of the price action during the consolidation here, it's quite similar, I would say. Okay. And also VCP emphasize on the contraction. In the ascending triangle, I don't think I came across anything that emphasized on the volatility during this pattern, when the formation of the pattern. Okay, so that's two different perspectives, I would say, but they are quite similar.
Right. Thanks, Nigel. So let me pose the next few questions to Vanessa. So this question is asked by Cole. What will happen to the structured warrants if there are corporate actions, like M&A, rights issue, or bonus issue to the mother share?
Okay, so for all corporate actions, right? There's only certain corporate actions that will actually affect the exercise price and also exercise ratio. All right, so this information is actually available on a website. You're looking at my website, right?
Yes.
Okay, you can actually go to learn warrants, and then we have something that is telling you the corporate actions and what we're going to do it. All right, so for dividends, there's only special dividends, right issues, bonus issue, and share split or consolidation. That the changes in exercise price and ratio is more than 2%, then only we will actually proceed to the changes, and we'll actually make an announcement on Bursa Malaysia. So we will actually adjust accordingly. While for normal dividend, interim dividends, we don't actually we actually price it upon issuing the new warrants. Yeah, so you can actually look for the information over here at Learn Warrants, and these are the corporate action and also the conditions.
Thanks, Vanessa. So the next question is asked by Nicole.
Mhm.
Is sensitivity a variable a long time, or it is a fix?
Okay, so for sensitivity, it actually change in accordance to the movement of the share price and also with the time decay and everything. So it's a variable, so it's not fixed. So when you see the sensitivity is 1.7 ticks, the example Aeon is 1.7 ticks now. So maybe later on when the share price of Aeon moved, that it could be, if it's going in general, if it's going further out the money, then it's less sensitive. When it's moving closer to in the money, that is actually more sensitive. All right, so it will actually change from time to time. So that's very important for you to know how to use all these tools for you to gauge the sensitivity of the warrants. Maybe today when you invest, it's like 1 tick is super sensitive, but the price move and all, and then it came like 3 ticks movement. Yes.
So it correlates with the moneyness of the warrant. The
Yes,
more in
moneyness
the
and
money the warrant is, then the higher the sensitivity.
yes, in general, yes.
All right. The next question is asked by Jun Hong. Vanessa, when we trade the structured warrants with a price matrix,
Mm-hmm.
do we buy at the ask price and sell at the bid price, or we can directly buy at the bid price and sell at the ask price? Because the newly issued structured warrants normally is traded based on the price matrix more than according to the order queue in the market. So that is his question.
Okay. I understand your question. So this is an example. This is actually the page for warrant matrix. So in general, even we buy shares, we will buy at the ask price and we'll sell at the bid price. So this is what we call the bid ask spread. And also this is the common practice lah. So you say that it's actually it's warrants are usually traded according to matrix. That's right, because for market makers, we actually have all these warrants on hand when we first issue it, and then we start selling it on the Bursa market. And for market maker, we have this commitment is to provide this bid and ask prices for you to queue. So usually we have more units to sell to you, right? So we will definitely queue in according to our price matrix. So it's actually very good for our investors because that's price transparency. You know how much you're buying and how much you will be selling because we will just follow the price matrix. Yeah.
All right. The next question is by Davy Hong. So what happens if an in-the-money warrant expires?
Okay, for in the money warrants that's expiring, this one is okay. So yes, as you know that there's 3 types of moneyness, right? At the money, out the money, and in the money. Only in the money warrants, because in the money warrants they have intrinsic value, and when it's expired, okay, I think I just use a calculator to show you that's better. Okay, example, Dayang. Okay, Dayang is currently not in the money, but it's okay. All right, so Dayang C38, the exercise price is 2 ringgit and 90 cents, and it's currently in the money, which means the price now is more than 2 ringgit and 90 cents. So you can use this under this warrant details. There's this blinking circle. Click onto it, and then this is actually a calculator. It will, example, it's going to expire in the money 3 ringgit and 50 cents. Wow, doing very well. And you have, it depends on how many units you have on hand. Maybe you have about 10,000 units that you have purchased for Dayang. And then we will actually use this calculation, the cash settlement calculation. You can just use this directly, but it's actually basically the intrinsic value divided by the exercise ratio times the units on hand. And then this is actually the cash that you are going to receive 7 days after the expiry. Yeah, so this is how the cash settlement works. But for the case that it's expiring at the money, which means it's 2 ringgit 90 cents or less than that, 2 ringgit 85 cents, very close. You're not going to get any of the set, a single cent back, including your principal, because there's no intrinsic value in your warrants. All right, so it's very important for you to sell it before the expiry date. Yeah, if it's out the money, like if you have.
Yep. So if it's at the money or out of money warrants, please sell them before the expiry date so they can get back some money back.
Some money.
Okay.
Days
If
before
in the money
expiry date,
warrant,
actually, 2 days
yeah,
before the last trading date.
yeah. So if it's for in the money warrant, you can leave it past the expiry date because there will be some intrinsic value that can collect back as part of the cash settlement.
Yep.
All right.
But the settlement price that we are using is actually 5 days average closing price. So we'll take average 5 days before the expiry date. Then after that, we'll minus out the exercise. Yeah.
Okay.
Okay.
The next question is a bit more scenario based. So it's asked by Chun Kiet. So he would like to say, hi, Vanessa. So for instance, YTL power, if the price keeps dropping for some issues only, but we still expect this bullish trend to continue in the long run, shall I still hold on to the call warrant and buy put warrant to diversify, or I just sell the call warrant first?
Okay. All right. So in this case that you're currently holding on YTL power call warrant.
Yes.
I hope you are not. I hope you did actually purchase it at a very high price when the mother share is at about 5 or 4 ringgit. Okay, so first thing you have to know that for all structured warrants, there's this thing called the time decay or the time value of warrants. So it's actually going to depreciate very fast, even though the share price never move. It's going to depreciate quite fast. So first thing you have to see whether the warrants that you're holding is very near to expiry. If it's really near to expiry, I would recommend to cut loss. But of course, first thing, if you remember that I shared on the risk strategy, right? It's actually when your view is wrong, then you have to cut loss. All right, because for warrants, which the performance of all these warrants, the returns or maybe the losses is going to amplify. But if you still have a bullish view, I would say that you have to apply your knowledge on technical analysis or fundamental analysis, that you can actually exit first and then you can gauge your next entry point. Yeah, but for put warrant is actually a good idea for you to hedge, but in a way you have to also understand that put warrants they have their expiry date as well, and also yeah, I think it's quite limited because YTL power put warrant is quite it's there's still some on Bursa Malaysia, but I would say you can hedge a bit, but in general, if you're still holding a big portion of the warrants, I would suggest to cut loss. Yeah.
All right.
You can buy something that's cheaper, cheaper warrants in the future.
The next question is by Yen Kai. So may I know why sometimes structural warrants don't move at all, despite they are still weeks before the expiry date? The example quoted here is Genting Malaysia C2S? Is it due to completely no demand?
Okay, so Gen MC2S. Okay, so for our website, we can actually search for other issuers warrant as well. So Gen MC2S is actually issued by CIMB Bank, but we cannot see the matrix because we can only show the matrix of RHB warrants. But for CIMB, they don't have any matrix available lah. Okay, in this case, you can actually tell that the sensitivity of Gen M C2S is about 13 ticks. So for you, for your warrants to flip to the next flipping point, first, one or two ticks, right? Then you have to move more than 13.3 ticks on the Gen M mother share. All right, but it expires today, I would say. Yeah, so it's actually the sensitivity. It's not sensitive, and very likely is because it's out the money. So sensitivity is actually the variable, the parameter for you to gauge why the warrant is not moving, even though the mother share moves. Yeah. But I cannot advise on this, but in general, if you look at the parameters, this is why, the reason why.
Thanks, Vanessa. The next question is by Guan. What is your priority or sequence in choosing a structured warrant? Okay, is it in effective gearing we give higher priority, or sensitivity we give higher priority, right? So what are the considerations, or
Okay.
when it comes to how do you rate the priority in terms of the considerations when it comes to choosing the right structured warrant? So if I understand his questions correctly.
Okay, I also understand. It's basically something that I shared just now. Okay, so you choose something. Okay, for me, first thing I will look at the moneyness, as I mentioned earlier on, because I want it to be very close to the the exercise price. Okay, so you see this is very close because it's 2% in the money. Currently it's somewhere is about 4 ringgit then the exercise price is closer. All right, then second, actually I will look at the effective gearing more because I want it to move more. If I want to invest in a warrant, I definitely buy for the leverage exposure. Like if not, if it's only one time, might as well I just look for the, I just invest in the mother share, right? So I will look for something that is with higher gearing. But at the same time, you have to consider the sensitivity because you have to look at the nature of the share movement and also your view on the share, whether it's going to move very fast, a few more ticks, or maybe it's going to stop at now around like 3-4 ticks like that. So this is actually very important. Like Sunway, if you decided to enter at this price, you think that it's going up. You think the magnitude is not that huge, it's not that big, they're not that impactful, then you can look for something with lesser ticks, which is more sensitive. So you can actually gain a bit lah, but it's not that much. Yeah, but at least you can capture the gains. So then I would choose this one. But if you ask me now, I would choose gearing first. Yeah.
Right. Thanks, Vanessa. So the next question is by Yen Kai. So is it better to trade in the money warrant since we can at least get some money back due to its intrinsic value?
No. The answer is no.
Not
The answer is
necessary.
no. Okay. The reason
Why?
being, I think there's a lot of misunderstanding. Why usually for warrants trading, I would say it's more on a short-term trading. That if you want to buy in the money, okay, let me show Sunway in accordance. According to the moneyness, this is very deep in the money. Okay, if you want to buy it, you are going to buy it at about 62 cents, right? So your investment cost is actually higher, and you want to hold until like maturity, like today, it actually expires today. Maybe you will just get back something, but it's not going to cover your cost because you might be putting in 6,002, but because of all this exercise price divided by the ratio, you're not going to get back 6,002 ringgit, 6,200 ringgit. Maybe you will get like about 5,000 or 4,000. So it depends on the calculation as well. All right, that's first thing. Secondly, we trade for warrants. as I said, if it's more in the money, it's more expensive because there's more intrinsic value. But for in the money warrants, they are also less. The gearing effect, the effective gearing is actually smaller than those that's out the money. You can compare here if in the money warrants is going to provide 2 times only on the effective gearing. But if you go down to the one with the one with deep out the money, right, it's giving you 6 times. So these are the differences. If you're going to trade for shorter term, you want to have a bigger gains, then you can go for something over here, because like 2 times and expensive and it's near the expiry, then it's actually not worth to trade. Yeah. So very important is that you have to look for something that is not too expensive in terms of the warrant price, and also use the price matrix and do a very short-term trading. Yeah. So it's not that in the money warrants are always it's going to make you make money for you. Yes.
All right, thanks, Vanessa. So the next question is by Chan. How can we measure time decay against call warrant price? Is it on daily basis, weekly basis?
It's on daily basis. Yes. Okay. So if you actually want to know, for these warrant tools, still here, you could go to theta. Theta is actually the Greeks for time decay, and for us, and it actually shows this number RM minus 0.0001. This means that this warrant value is going to depreciate by this number every day. So this one, like for example, this C19, right, is going to depreciate 0.0012 every day. Yeah, so this is how we measure the time decay of a warrant. So for you to choose a warrant, you can actually look for something that is like smaller theta. If you want to hold for longer term, like you want to hold for 1, 2, or 3 weeks or more than that, then you can look for something with smaller number of theta. Yeah, this is how we measure.
Okay, so for those call warrant which is less sensitive, will tend to have lower effective gearing. So is this statement correct? So this is a question by Richie.
Yes. Yeah. Relatively, yes. For those with super like sensitive, right, I have seen like 0.5 ticks or maybe 0.8 ticks, which means 1 tick because 1 tick is the minimum. The gearing is usually at about two times at all. But if you're looking for something with higher gearing, then you can see it's not so sensitive. Yeah. So it's actually a trade-off, and it all goes back to what I say. I look for the moneyness first, because it will be at the center, like here. So you can see it's actually quite balanced out, not too sensitive or not too not sensitive, insensitive.
I see.
Yeah.
There's a question on Hong Kong and US based warrant. Why do they have high sensitivity as compared to Malaysian structured warrants?
Okay, so the sensitivities is by ticks. The more you see the ticks, right, it's actually less sensitive. All right, and if you know that the tick size is actually measured by cent, like for example, Bursa tick size for the securities that's traded on Bursa Malaysia, it depends on the value of the shares, the securities lah. So usually for warrants, 1 tick is half a cent, and for shares like 1 ringgit or 10 ringgit is 1 cent or 2 cents. So for the US warrants and also Hong Kong warrants, they have their own tick size as well. Yeah. So and you can actually see that for Amazon, it's actually $173. So the tick size, everything is actually it's following the Nasdaq tick size lah, and also the price of the securities. Yeah. So when you see it's larger, means that the sensitivity is based on the movement of their share price, because they are not going to move half a cent, right? They're not going to move half a cent. Yeah. So that is how you look at the sensitivity, based on the securities price and also the tick size. Yes. I hope I answer your question. So you can look for
All right.
Amazon
So
tick
let's
size.
since we have overrun the sessions by 5 minutes, so let's do one last question. So Vanessa, does your team entertain if customers call in to buy on the bid? So that's the question.
I see. We will entertain on clients' call about our inquiries and any technical difficulties um, but for this one, actually for us, we will trade and also will actually provide according to the price matrix. Yeah. So if you would like to buy on the bid, you can queue at the bid. If the mother share price drop, or maybe it moves to what it states on the price matrix, then you can actually get it at your queued amount, queued value. So we'll just follow price matrix.
All right, so that's the time we have for this session. So thank you so much to both our speakers, who are Mr. Nigel Chong, the founder of NC Space Investing, and also Ms. Vanessa Tong, who is a warrant specialist from RHB Investment Bank. Thank you so much for gracing our event to share knowledge about how to use VCP pattern to trade stocks, whether on swings or on other trading time frame, or how to use warrants to complement this VCP trading style. Right. So with that, thank you everybody for tuning in until the end of this session. Hope that you gain enormous value out of this, and we'll see you in our next webinar with RHB. All right. Bye bye, everybody.
Thanks, guys. Bye bye. Thanks for your time.
Thank you all.
Thanks, Shane. Thanks, Shane.
Thanks, Shane. Thanks, Vanessa.
Yes, my pleasure.
Yeah,
All right.
if anyone got any question, can call me tomorrow.
Sure.
Yeah, of course. Okay. All right.
right.
Thanks. Thanks.
Bye.
Bye.